Good morning, traders. This is Michael coming to you from GammaEdge on March 13th, Thursday, March 13th, with a pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at a market trend model that continues in a downward sloping fashion and bearish state while the sellers remain in control. We did try to get a midday reversal yesterday around 12 o'clock. We were discussing that live. We did start moving above the shortest term moving averages. But really, towards the end of the day, we kind of failed also. So we'll continue to watch this. If you're looking for any type of market reversal, there's really about three things we need to see. One, we need to see the bolded CT start consistently living above these shorter term moving averages. You need to see these shorter term moving averages start stacking in the proper order from lower left to upper right. That would indicate that buyers are starting to try to take back control of the market over the sellers. And then you need to see the up here in the top panes. We would like to see the new highs versus new lows. You would want to see the new highs continue to outpace new lows, which we consistently have not seen for the past few weeks, as well as the filtered cumulative tick, which is our institutional indication of what is occurring. Plus 1,000, minus 1,000 transactions. You would like to see the filtered cumulative tick start living above the zero line and expanding back to the upside instead of the downside, which we have seen over the past week also. Obviously, on the longer term look, it's going to take a significant amount of time to repair the overall state of the colored ribbon, which is, again, this is our longer term positioning of money. The red is expanding, continues to expand below the cyan. So the CT would have to start living above the colored ribbon for us to start changing the slopes of the colored ribbon. So three things I went through there. Make sure you review those, understanding our tick tag combos. And at the very least, we would need a close above the previous day close and maintain that over multiple days for us to see any amount of short-term reversal in the overall market and buyers trying to take back control. Moving on to the SPXA, we have the expiry turned on for March 21st. Basically just noting that we do see the out-of-the-money puts slightly decreasing, exposing some of the in-the-money calls below us. This may be the first move or towards a bullish state. But again, we'll look at the all expiries here, which still remains in a completely bearish state. So we want to look at this in isolation, take it with a grain of salt. Obviously, this is institutional positioning on the SPXAs, but we might be seeing some sort of short-term improvement in this overall sentiment and structure. So make sure you're cognizant of that. SPXP. The full expiry is turned on. We are put dominated throughout the complex. The out-of-the-money puts are still in control below spot price. Obviously, this is the left-hand plane. So what we would want to see initially is you would want to see these out-of-the-money puts begin to close, exposing some of the in-the-money calls below us. That would be some sort of stabilization. And then in the delta balance, you would see the left-hand plane become call dominated. Below spot price, and then the right-hand plane can still remain in the money put dominated, but that would allow some sort of stabilization. Then moving forward, if we want to see price appreciation, we would have to see a significant amount of in the money puts above us begin to close or expire, depending on what time frame they're in for the expiry, and then that would expose out of the money calls above us. That will only drive us so far. We still need to see that out of the money call speculation in the right hand plane, adding positive deltas to the overall complex. So understanding those components of what we need to see for the market to turn around is really essential, instead of just blindly what we see everybody else talking about as buying the dip. We can see it with our tools. We can see it with the market speculation and positioning, and we want to monitor this day over day. And then essentially, obviously, what we want to see is the transition areas that we discuss multiple times here and how important they are. You want to see the transition areas narrow, which we are seeing here, but you also want to see those transition areas start to advance in the overall market, indicating that the structure is turning less bearish and more bullish, and then obviously price close above the transition. We tried yesterday, but we ended up closing below the transition again. So again, indicating a weak close yesterday. So again, monitoring those key essential components of what is happening with market speculation and understanding within the overall complex what you want to see for the complex to turn around. The next thing we'll go through is the SPXP 0 DTE. Understanding we are still put dominated, but we do have, if you look at the next stat inlay, we do have in the money calls below us. We had the same condition yesterday. That's why we were discussing that it may be difficult to go down further than what we were seeing in the lower DS. Lower DS almost matches where we were yesterday when we saw that pretty quick V reversal that we were discussing about. So make sure you're reading the SPX game plan, understanding your if-thens for the day, where these key levels are at, and how to execute. We, and I personally myself, as well as the GammaEdge team, we only execute where we have an edge. And where we have an edge is within these overall structures, these levels that we're indicating, and understanding that executing just at those levels, sitting on your hands the other times and not getting chopped up within the middle of transitions is really the most important thing, and the key component that we like to convey here at GammaEdge. Having a game plan, executing only at a certain level, certain levels, and executing really only a small amount of trades within where we have those, where we feel we have those edges. So that's completely laid out in the SPX game plan. I'll go over it in the trading view chart here in just a minute. But again, left-hand plane in the money calls below us can be supportive today unless we see the vol-m command with significant negative slopes. In the money puts above us, it's going to be difficult to overcome that significant amount of negative delta overhead to a certain point. So we'll continue to watch that. Again, 5650 has really been that overhead ceiling that we continue to bump our head on for multiple days. And obviously that's the top of the drunken sailor range too. So huge confluence at 5,600 today with DEX, GEX transitions there. We do have a narrowing GEX transition, which is advantageous of price stabilization. So we'll continue to watch that again day over day. So let's go ahead and head to our trading view chart and understanding that what our game plan is for today. So all I did was insert this table. This is directly from the SPX game plan. I just read the SPX game plan, did my own SPX game plan, and then came out with my trading strategy for the day. This can also translate to SPY. You can do the same thing. We are obviously just using SPX at the moment. So I overlaid 0DT GEX transition, 0DT DEX transition, as well as Drunken Sailor. And when you do this, you visually can see where the significant amount of confluence is occurring and where a price is probably going to get the greatest reaction. Overlay that with our net stack command, and you have those levels of highest sensitivity. Why does that matter? These are the areas where we want to be looking to execute trades. I've laid it out pretty mechanically. If you're within the overall transitions or drunken sailor range, obviously significant volatility, you can get pushed around. But if you have a trading plan, mechanically execute, then you can, and if your trade doesn't work out, then you're out of the trade. There's no questions asked, right? So that's how I personally execute. That's how Paul executes. And that's how our team here at GammaEdge really want new members and existing members to really start executing via the SPX game plan. Don't trade where you don't have an edge, right? And we have edges that we've statistically proven within these overall levels that give us the highest probability. Now, they're all not going to be winners. We understand that. But we want to stack the probabilities in our favor. And stacking the probabilities in our favor means understanding where these key sensitivity levels are, where we have the highest probability of the best trades, and then just executing those trades. That's it. So that's what we're going to do today, and that's what we're going to continue to do here at GammaEdge. So obviously, I encourage you to read the SPX game plan, do your own game plan, and then have your trading chart ready to execute. Now, you can do this in your broker also, whichever platform you're using. I'm just using TradingView. It's very easy because our scripts overlay, and then there's just a numerous amount of tools that you can use in TradingView that are very simple. So thesis for today, obviously kind of the same confluence. 5,600 is going to be extremely important to stay above. If you're bullish, if you're below, leaning a little bit more bearish. Transition level, DEX transition here is at 5635, and then Drunken Sailor's at 5650. We've discussed this, what our entries would be above Drunken Sailor range and targets. Shorting again, 5650 Drunken Sailor range from below. If we reach those levels and fail, then we would look for a quick short down towards the top of the DEX transition. And then if you fail also there, then you can carry a runner on down towards the possible GEX transition. Again, depending on what the vol-am command is looking like. If we're both in positive slope centroids, call and put centroids, it might be difficult to short. If the tick is turning up, the CT is above the shorter term moving averages, it may be difficult to short. So make sure you have all the three of those laid out and just systematically go through them and say, what is tick doing? What is my market trend model doing? What is my vol-am command doing? And what's the net stat command look like? Okay. And if those are all green lights to go long, then execute your longs. If those are all saying that the market is weak, then be looking for shorts. And that's just the simplicity of it. And that's how I execute. And when you have to make this very simple and have the trading plan so you can execute in the heat of the battle and just systematically go down your checklist and then execute the trade. So hopefully that helps for today. We want to continue to help traders get up to speed with our tools and just make this as simple as possible, understanding where gamma, delta, and the transitions are really key to executing a positive outcome game plan. So with that, I'll leave everybody. We'll be in Discord in a few minutes to answer questions if anybody needs anything. Thanks, everybody, and let's make it a great trading day.